You just allow me to check with the jurors if we can start with the presentation. Jurors, can we start with the next presentation?
Okay.
Let's go ahead, Tejas. Jurors, the presentation is from Hexaview. We have team members. Tejas is the lead who will be presenting the innovation. And Tejas, the timer starts now.
Yeah, sure. So greetings of the day, everyone. Myself, Tejas Gulshetwar. I work as an MTS at Hexaview. So today I'm here to present a application that we have created called credit decisioning. So the idea behind the creation of a project was to create an ML-based credit report eligibility calculation for an applicant. For say example, I'm applying for a loan and I'm trying to check if I'm eligible, I will be eligible for that loan or not. So I'll be scored on the scale of 0 to 100, 100 being the best, and that I should get the loan. The project aims at resolving the eligibility of the applicant and also reduce the paperwork manual process on the lender side. So uh, to reduce the time required in processing the application. So our key objectives were to reduce the manual workload, perform unbiased decisioning. You may know that in lending space, there are when I'm applying for a loan, there are basically three steps. The first step would be to create the application. Second step is the KYC and fraud detection. And third step would be the loan decisioning step. So if the person should be given the loan or not. So we are trying to fit into the third phase of the entire process. So our solution has a better turnaround times, reduced paperwork, low errors, and minimalized manual process. So we score the applicant based on a few factors. Some of them are listed here. For example, credit score, collateral, necessity of the applicant, the employment history, the education level of the applicant, if the applicant has a guarantor for them, the past payment record, citizenship status. If the applicant is a US citizen, they should be given a bit more priority as this application would be based in the US, and also the family background to know about the dependents of the person applying for the loan. These are just the overview of the factors. In background, we are utilizing 22 different factors for scoring the candidate. We have developed multiple ML models for creating this project. For example, SVM, so random forex, SD boost, and we have performed ensemble learning to you compile the results of all and then score the process applicant. So this would be our solution. The idea of application is to predict the score of a loan applicants for their eligibility. The eligibility was based on the models trained by us, ML models, and which incorporates roughly around 22 different factors. The parameters will score the candidate and will generate a detailed report about the insights. For example, if the candidate has positives, these are the positives, these are the neutral insights, and these are the negatives. The application will encompass the user history with the lending firm as well to predict the eligibility. And the report and score will share the strengths and weaknesses of the applicant. So when you visit our website, so you will be first taken to our landing page. When after that, when you go to the get report section, you'll be presented with four different sections of a form. First off would be the personal information. Second would be the income and loan related information. Third would be the credit information. Fourth would be guarantee related information. After filling all these details, you'll be taken to the report or the results page, which will contain the score along with the summary. Summary which will contain that if a candidate has a good score and if they should be given the loan or not. The applicant, for example, the score is 77. So the score is good, but not excellent. So the applicant can be given the loan, but the lender should proceed with caution. We have divided the score into multiple different categories. For example, 0 to 50 would be very poor. So process should be completely manual. For example, if the guarantor is a trustee of the lender, they might give a loan, or for example, after that, for 50 to 60, there's another category poor. For 60 to 70, there's another category called average. The candidate has an average score in all the factors. After that, we have defined a category of 70 to 85, which is good. That vendor can receive the loan, but should proceed with caution. And after that, we have the last category, excellent category, which is of the score 85 to 100, that the candidate has received an excellent score and should be given the loan, but it's up to you. So these are some of the positive insights that we will see about the candidate. The credit score is a positive, monthly debt obligations, loan amount, debt income ratio, credit utilization, citizenship status. So these are some of the positives, some of the factors that positively impacted the score. After that, you will see the neutral insights. Neutral insights would be monthly income, years of experience for that particular candidate, and the negative insights. So these were the factors that negatively affected the score: loan to collateral, total assets, guarantee status, etc. So, how do we differentiate ourselves from the crowd? So, there are basically, I like to explain it in 5 points. The number one would be the amount of data and the number of factors that we are using to judge a candidate. Some lending firms actually just use the credit score or just a simple income. So these may lead to substandard or bad loans. So we are trying to eliminate that case. Second would be the usage of ML models for determining the score. So we have trained multiple different models for on the data we that curated ourselves. Third point would be that in manual processes, there may be bias against a gender, religion, or race. A person may be biased against someone. So our system is biasless. We do not make any differentiation against any gender. Fourth would be our interactive, easy to use UI. As I'll demo further, you will see that. And fifth would be as our application is following a microservice architecture, it can be easily integrated with existing lending applications as well. So the market potential, the current global decision making of fraud detection market is estimated to be around $53 billion right now, and it's growing at a CAGR of around 23.8%, and it's expected to reach around $272 billion by 2031, which is a huge amount. So right now we are trying to capture that. We are trying to optimize that process. Our solution offers potential cost savings by reducing the loan related losses, decision related losses for the lending firm. And the solution right now we have created is just for the US, but it's highly adaptable to any other geographies as well. Right now, our data is fine tuned for the US, but it can be easily replicated across Europe or India, anywhere. Our target market segment is currently North American financial services. So the social impact and sustainability. Uh, our motive is to provide equitable access of credit to everyone, regardless of any other factors, for example, gender, ethical background, etc. By making the process completely online and reducing the turnaround times, we are also reducing the carbon footprint for the lending applications. And by reducing the losses caused due to the decision making of the lender, we are also making them financially sustainable. We also provide round the clock guide support for that. So the conclusion would be that our system predicts the eligibility score and insights pretty accurately. As our system that we have implemented is a microservice, it can be easily integrated with existing applications. Third would be our using our system. Organizations can save time spent in manual decision process, which is a huge amount of time spent. And fourth, that our application was built by a team of 4 members: one data scientist, one backend developer, one QA, and one FE developer. Let's proceed to the demo.
Tejas, you have 1 minute left. You just make sure it's quick.
Sure. If I'll just fill the form.
Just few seconds left. I need to stop sharing the screen. Are you
No, let him
very close?
continue, Kevin.
Okay, so
Let him just show.
It may take a few seconds.
Okay, so while it is loading, Tejas, good job. Chitra, good job. But since this is an innovation award, it would help us to highlight what is your innovation, because this kind of ML model is already there for ages, right? And much more sophisticated model. So where is the innovation?
So innovation
main
right now that is being done in this segment is in the fraud detection or the KYC market. No one is targeting the decisioning part. They are just classifying if a applicant is a fraud person or not. We are trying to say that this is the person, and according to the data that was provided, and this would be the eligibility score for the candidate if they should be given the loan or not.
So you're trying to identify the fraud in KYC, but there are a lot of models which are there.
No, we are not trying
Really?
to predict the fraud in KYC. KYC, we are assuming that the step is already done. We are trying to focus on the next step, that if a person should be given a loan or not. A person that passed the KYC does not mean they have a good financial history or everything.
No,
It
fair
just
enough.
means
So
that
almost all the banks, all fintech company, they already have the model. Where is the innovation?
they
You
have
must
the
have
model.
brought some innovation. Just highlight it so that it has
Yes,
free.
yes. So our ML models are our innovations, the amount of data that we have, and the number of factors that we are using for scoring. We have 22 different factors. For example, credit score, number of on-time payments, delayed payments, missed payments, the all the other number of lawsuits going on against the person, number of dependents. These are some of the few, if I list.
Okay, thank you.
Thank you, sir. We move towards the next question. And the jury would like to ask first. Mr. Pranav, would you like to ask first, sir? Ma'am, you want to go first? How is it?
Yeah,
Sure.
sorry, can I go?
Please,
Yes,
please.
sure.
No, sorry, I've been a little confused because your documents that you have submitted, the problem statement there is fraud detection. Your problem statement itself says it's a fraud detection model. And
No,
you
it's a,
then go on to talk about the frauds. But the one that you showed us is more like a scoring. I am not able to reconcile between the two. Just please help.
So we are assuming that the fraud detection has been done. If the person is fraud or not, we are just trying to focus on the next step itself. I
No,
think there's some
I'm sorry
discrepancies
to
there.
repeat, but your document that you submitted to us, your innovation is titled as fraud detection system.
I guess there's some discrepancy in that then.
It is a submission which has been made as per the juror is under fraud detection, and the scoring, the innovation which you have shared is different. Hence, the juror would like to understand what is the actual solution which you want to present. Is this the
So
one which is, yeah, please.
yeah. So the one I wanted to present was the scoring one, the decisioning part of the application process.
All right. Okay.
Pranav, sir, your question.
Yeah, thanks, Tejas. I have a quick question for this specific thing that you presented. Can you talk about the traction in terms of, let's say, number of clients or revenue, or maybe it's too early? You can just comment on that.
It's actually too early. We are actually proposing this to our clients right currently.
Okay. Okay.
Thank you. We'll move to the next question. Tarun, sir, do you have any question?
No, I think my question was in a way related to Professor Rajni, because I was also looking at the fraud detection angle. So this is a database. At the back end, where do you link this database to? Uh, how do you how do you authenticate that the data that I'm inputting how do you authenticate data integrity here, which is what my thought was when I was going through it. I think it was similar to Professor Rajini's thought. So that's where I was a little confused.
So yeah, we are just a last step in the process. We are just coming in plug and play to the decisioning part. We are already assuming that the KYC has been done.
It's basically more or less related to the user history with the lending firm or the banks that we have. So the database that we just discussed is actually being processed or being trained in the ML models that are actually fetching out the KYC or fraud detection related information already. What we do is we provide them the final steps into detecting whether the loan application or the applicant is actually being eligible for their you know lending amount or not. So that's where we stand in. The database or the models that we have trained are using the user history with the banks and the lending applications. So that's where the models are being
Okay.
trained
So
on.
this model that you have created basically sits in individual bank where so let's say if I apply to ICICI Bank, I already have an account with ICICI Bank. I may have some history with ICICI Bank. So it takes that history, things like check bouncing, etc., and their salary inputs, etc., and then you calculate based on their expenses and things like that this person is eligible for a 30,000 rupee loan and not a 50,000 rupee loan.
Yes,
Okay. So it is
that's the thing.
so it is not a generic solution. It is a specific solution for the bank in which I am a customer. So if I have an account in ICICI Bank and apply to Kotak Bank,
Let me
software may
just
have limited use.
clarify that.
Yeah.
Actually, the model that we just presented right now was generic, but we can fine tune it for the data present for ICICI. So right now, let's say they have people applying for loans from 2 to 3 lakhs. So we can optimize our models for that range. A Kotak can have loans of up more than 10 lakhs. We can optimize for that type.
Yeah, even the user would, if before applying the loan, can see their own scores and the reports will be generated accordingly. So based on those reports or those scores, the person will be able to identify which bank will be able to provide them, the loan with this particular score. So that's how we are actually trying to implement this application. Or you can say these will be small APIs that can be integrated into the current applications that any bank or any lending firm is using right now. So that's where we are trying to pitch in this one.
Thank you, Jules. Just exploring if there is any follow-up question. Just checking if there is any follow-up question from the juror. We have 2 minutes left. Yes,
Good
Pranav.
attempt, but
I
I
can-
think we should. Okay, please go ahead.
Yeah, on my previous question on traction, I understand it's early, but who are the people you are talking to? Like maybe talk through your go-to-market. Is there a customer segment where this particular innovation or solution you expect to have a lot of traction? What is initial feedback, if any?
Yes, sir. Currently, we are trying to pitch our existing clients, which are in the lending space. They are of, we can say, SME, provide SME loans or personal loans as well. So we are trying to go into that direction.
But are these like, let's say, second or third tier or regional small players who don't necessarily have, let's say, AI ML capabilities? Because to the earlier question, I think Bhupesh ji asked that. I mean, this is very, very common for everybody, like a typical lender to have a credit scoring model. It's like super common. So that's why I'm trying to sort of figure out. Maybe this is particularly valuable to the smaller guys, or maybe I'm wrong. I'm missing something.
Yes, so the guys that we pitched to, we're using a team of like, let's say, 5 to 10 members for this current process. So we are trying to reduce that.
It's basically to reduce the manual workload. To sum it up, it's the manual workload being reduced. one of the leading lending firms have actually integrated this application or this thing with their existing application, and they found it very useful because the manual process and the paper process has already been reduced to a larger extent. So that's where this
No,
application is being
Chitra,
useful.
Pranav's question is what kind of clients you're targeting? A small client, because fintech companies, banks, they already have this model, they don't need it.
It's actually very generic. So anybody who feels like imparting this particular application with them can be
No,
pasted.
but since you have developed, what is your segment? Not
We
Yeah,
are trying
anybody.
to
it's
pitch
the
Not
tier
anybody
fintech.
2 or
will
tier
buy.
3.
Huh?
We are trying to pitch to tier 2 or tier 3 lending
Okay,
companies.
okay, got it. Wish you good luck.
Thank
Thank
you.
you.
Thank you, team. Thank you for your presentations and teachers. And this is information to Surbi as well in the call. Would request you to please update your document. If it's been changed in the documents, request you to please do update